Okay, now I'm going to show you how our portfolio feature works. So we just added another property that we actually own, our Kreuzberg flat. And now we want to figure out if we should either buy this one next or this one next. So I can go into my portfolio feature under tools here. I'm just going to put this aside. We see we have 3 properties, a 10-year projection. We own the Kreuzberg flat and we are considering next this one or this one. Yeah, we can toggle them. We have the verdict again, the tax shield, and then we have this bar that comes on here. We have income 100K single and scenario. So now we are in these different sort of metric areas, and we have a lot of insights here. So basically, we can compare, if we just own it, we can compare here our two different flats and what they would do to our taxable income from here, right? So you can clearly see this chart moving. So this property would give us a bigger taxable income reduction. So it also says us here, which also would increase our tax benefits. Yeah, and at its peak in 2027, the portfolio takes 42,000 euros off your taxable income from 100K to 52K. So instead of paying income tax on 100,000 euros, you pay income tax on 57,000. Yeah, so that's a big difference. Even here, you're out of the biggest tax group, which is the red line over here. Yeah, so you're under, these two properties get you under that line. This one just barely, but this one definitely. So interesting. Now the question becomes is, can you carry another? Can you actually have the cash flow? So right now the portfolio pays you about 400 a month. After tax, a further property would draw on that cushion first before it asks for anything that you own. So in here you would see a cumulative cash flow that you would get from this property versus this property. Yeah, so here you would actually make less money. Here you would make more. Yeah, and you have your total. You have a buy property view. So that's interesting. And then here, what the bank sees, this is just your combined sort of loan to value ratio, how much of the loans you have paid back. Just an interesting picture. And then at the end is sort of like what it all builds. So the total you put in, equity and purchase costs, how much money you're building, and what the multiple is, and then how much each of the properties built. Total, obviously, and then the buy property. And here a little insight on how that is done. So you would sell both. There you have your net sale proceeds, your rental cash flow pre-tax, and then the total wealth built. So that's that. If you would want to check out, or one other thing we can do here is, in the scenario we can say, I want to sell this one much later, and you can apply it. Computes. You have an active scenario. You can see here now the chart goes up. You sold this property, but you're keeping this other one. Here this changes, and the cash flow also changes, and your tax picture also changes. Yeah, here you can clearly see you're almost at no tax benefits here. So that in theory then becomes an indication of maybe when you could afford a third one, and so on and so forth. This is how people, or let's say more experienced investors, look at this whole building a property portfolio thing. You can reset it and go back to normal. So yeah, if this is interesting to you, you just need to have multiple properties, one that you own and one that you're considering.